I'm Phil McSweeney, and I work with a lot of startups in a capacity that I guess is variously called mentor, coach, advisor, NED, and I've been a chair of two companies. And what I'm really trying to do is give more founders the opportunity to survive, firstly, and then grow their company.
Perfect. Now, I want to go back to the very, very beginning. So you had a redundancy that
Yeah,
changed your career trajectory.
yeah.
Now, how did you get into the investing side of things?
Okay. Um, my career began by me joining the NHS, and I was in the NHS for 30 years, and then one reorganization too many, I got made redundant. I was a director of a trust, and up until that point, had done an MBA and, got into senior management. And I thought that was kind of me for life, really, and that's what I'd be doing. And then early 50s, I got made redundant. And I thought, I don't want to go back to that big bureaucratic, slow moving organization, corporate stuff. I'd kind of
Yeah.
wanted to do something that I enjoyed and where I hopefully could work with people where things were a bit more dynamic, a bit more quicker. And just by chance, really, I discovered two things in parallel. I discovered that there was a world of startups, which you'd think these days, well, everybody would know that, but, I didn't. So, I'd been in the NHS all my life. And I discovered this thing called angel investing. So I went along to an angel group and got kind of sucked in, I suppose, by people coming along and telling exciting stories about if only you gave me 250,000 quid, I could change this in the world. So I was drawn in by storytelling, by vision, by, people's potential to change things in the world, to create exciting things. And I started doing some angel investing. And I quite soon realized that although people had great ideas, they struggled with execution, with making things happen, with growing and scaling a company. And lots of early stage startups went bust and still do go bust or run out of money. So I thought, I'd got some life experience, managed teams and so on. Maybe I can help. So I got into the kind of parallel thing of angel investing and coaching or mentoring founders of startups.
And fast forward to today, how many companies have you invested in?
I kind of lost track really, but I'd say 40 plus,
Okay.
Oh, wow.
and a small few of them are doing very well, and the majority have gone to the wall, or one or two are what I call zombie companies, which they will either never sell, but they won't fail. So it's kind of dead money if you put money into them. They
Yeah.
won't exit. But yeah, that's the kind of split, if you like. A few exit, a few do well. The majority either just trickle along, not achieving, unsaleable, or fail. So,
Interesting.
So,
Okay.
so out of them 40, how many pitches did you hear? Like out.
um, yeah. Well, I mean, I obviously heard a pitch for each one of those,
Yeah.
and then had a like one-to-one meeting follow up with those founders. Um, but I receive a pitch two or three times a week, and when I was a full time, well, not full, when I was a regular attender at an angel group. Um, the usual pattern was six, maybe eight companies would come along and pitch. You may choose not to invest in any of them. You may choose one. But I would say in the last 18 years or so that I've been an angel investor, I've heard north of 1,000 pitches
Wow. Incredible.
live, and
Yeah.
then read probably tens of thousands of pitches, that get mailed to me.
Incredible. Well, building on that, what separates a good pitch from a bad pitch? Like, what instantly turns you off a pitch, even if
Uh,
the idea is amazing?
I think it's I think it's really difficult to tell a story in a document that's say 18 to 20 slides. But you have to kind of begin at the beginning and try to interest people in a big problem that you think you've got a solution for and that you've got a unique solution for, and then show people that you have worked out what a route to market is. You've worked out that your business is in some way unique or different from all of the other competitors that may be out there, and that because it's unique or different or disruptive, or it's spotted a trend in the world, that enough people are going to be interested to say, yeah, I could see this happening. I could see this vision kind of materializing. And then the rest of the pitch is kind of the mechanics, really. What's the business model? What are your financial projections? You know, how are you going to get to profitability? In what time frame? How, you know, why might it be of interest to a buyer, you know, or are you going to go through an IPO route to get listed so that people can exit from the company? And I think often the biggest challenge is how you start a pitch to get
Okay.
people interested in the first one or two slides. Um, and I think I often describe this as being able to hit people in the face with a baseball bat. You've got to go bang. You know, what is the real message here that's going to kind of, you know, wake me up? You know,
Yeah.
some big fact, or you know, you ask me to imagine something that you think is gonna light me up or fire me up.
So it's really that the first sentence you say, you want it to be like a big boom,
Yeah.
basically saying to them, here's why you want to listen to the first two slides, effectively. And that's
Yeah,
the
and
way
I
you really
often
hook someone in.
you know, a pitch is like a movie trailer, really. You know, you
Okay.
can't tell the
Yeah.
whole story. You know, it's 2 minutes of you know, watching a movie trailer, but enough to make you want to go and see the whole
Understand
movie,
it all. Yeah.
or you know, talk to the founders in more detail. And it's a movie trailer like a James Bond type movie. You know, every
Yeah.
James Bond movie you see begins with something that within a minute has got you on the edge of your seat.
Yeah.
Yeah. Okay.
And if you can't do that excitement thing, you know,
What does actually get an investor on the edge of their seat? Is it the idea itself or the planned execution of the idea?
I think it can be a combination of things. It's the idea and its novelty, and it's, you know, I haven't heard anybody trying to do this in this space before, but in a live situation, you make an impression on somebody within, you know, the theory says 30 seconds. You can decide whether you want to have any further relationship with this person or not. So
Yeah.
the person themselves, you know, the worst thing I see people doing when they're pitching is they have their pitch projected on a screen behind them, and then they sit and read it from their laptop.
Okay.
Not very
Yeah.
inspiring.
I can sit in the audience and read that. I don't need you to be here to read this to me. I
Yeah.
need you to perform in some way that makes me convinced that you've got the dynamism, if you like, the energy to make this company happen in 5 years' time. You have to give me that confidence, you know, that you can be, you know, a chief executive, run a team, spread the business across 3 continents, you know, whatever, generate 10, 20 million pounds a year revenue, because you are a CEO in the making, you know.
Yeah.
And
Now,
if I
off of
don't
that,
believe that, then why would I invest? So,
Yeah.
exactly. Why would you put your money into the person?
yeah.
Off of that first pitch, so the very first pitch that you, not the first one you received, but the first one you invested in, what was it off that pitch that made you said, yes, this is the right one for your very first investment?
I'd have to say that that was 18 years ago, and I'm not sure I even remember.
God, what about a recent one that, like, why did you pick
One of
them?
the very early ones was because I had some sector experience, and I could see that what they were pitching would fill a gap in the sector to my certain knowledge. And then I thought, this fulfills a need, and I liked the two people that were pitching the idea, and they were welcoming of me trying to offer them some coaching or advice. So they were receptive to,
Yeah.
learning,
Yeah.
which helped. So, those things together, persuaded me that um, this would be worth a go, and they still survive. They're still about.
Incredible.
They're probably valued at about 10 times their initial valuation when they
Wow.
came to
Okay.
pitch,
Yeah.
and with any luck, they will exit.
Now, you said there that you liked the two people. Are there sort of traits in people that are going to succeed and do well in business when they're pitching that you can see?
Yeah.
And what would them traits be?
Yeah, you could talk to 10 different investors and ask them for traits that they look for, and they would
Okay.
give you 11 different answers. So my personal list is that I like to see that they're obsessed with something.
Okay. Yeah.
Yeah, and that obsession often means that they have been willing to make sacrifices in life, because they're pursuing something that they want to happen in the world, and they realize that they, I don't know, can't go out and socialize with their mates every night because this is more important to me.
Yeah.
So I like to see that they're obsessed, determined, that they have what people call grit, which is basically, if you get knocked down 9 times, you'll get up 10 times and you'll keep coming back. I like to see courage, that they've actually stopped talking about doing something and made a bet on themselves that they can make this happen. And I like to see, I never quite know what to call this, but an energy or a spirit. They're not dull people,
They got a bit to them,
Yeah.
sort of
they've
thing.
got a bit about them. Yeah, they've got a
Yeah,
bit.
about them. Yeah.
They
Energy.
don't
Yeah.
have to be extrovert particularly,
Yeah.
and I don't
Okay.
think, extroverts make better founders than introverts or whatever,
Interesting.
but they are kind of irrepressible in some way.
Okay.
I often think of Tigger in Winnie the Pooh. They just keep bouncing back. They've always
Keep
got
going.
something, so, yeah.
Brilliant. Now, we've discussed a couple of good times. Now, can you talk us through an expensive mistake you've made? So, a bad investment and
Yeah.
why that, like, what you saw in them, and
Mm.
then what was bad about it? How did it fall off, and how did they fail as a company?
Um, I I'll talk about my own naivety, I think, in the beginning.
Okay.
When I first got into angel investing, I didn't appreciate the importance of um, working out whether the person or team that I was investing in were investable people. And I was more sold on the idea,
Okay.
what they were going to do in the world and so on. So the way the angel group that I was a member of seemed to work is, a small committee of people shortlisted 6 or 8 people to pitch an angel group. They all came to pitch, they all went away, and then the organizer of the event said, who is interested in possibly investing in company 1 or company 2 or 3 or whatever? And then if there were interest in some of those companies, they would dispatch somebody that would go and do some due diligence on the company, and that person would come back, perhaps in a couple of weeks or so, and say, yeah, I've met the founders, they seem great. I like their business model, it all stacks up. Um, who would like to follow on with their interest and invest, a sum of money. So it didn't occur to me till after that had happened several times that I had never met the founders on a one-to-one basis to
I
work
was going
out
to
for
say,
myself whether
yeah,
I thought they'd got the kind of attributes that I subsequently thought that they would need. So you were just betting, you were gambling. I mean, it's all a gamble, but you were
yeah,
kind of gambling even more on someone else's say-so rather than your own judgment. And I'm not saying they failed any more than the more recent investments.
yeah,
Um, I just thought this, when I thought about it afterwards, after doing this for several years, I thought this is bizarre. This group is pulling these people together for me to make a decision about, but I'm not getting to know them one to one. And I never had follow-up meetings with them. If I invest in somebody now, you know, um, and I'm, acting as some kind of advisor, mentor, or coach or whatever, um, I'm talking to them once a month, sometimes once a fortnight. I'm really getting to know them very well as people, and helping them work through obstacles, challenges, problems from my own experience. And I never did that in the past. So I kind of changed the way I work as a result of that. So
Would you say you're getting better at angel investing? Are you seeing like higher rates of return now compared to when you started?
I would say it's still too soon to know because you can invest in a company and they still haven't exited 10 years down the track.
So
Um,
it's quite a long-term game. Yeah.
so it is a long-term game. My earliest investments that are still alive, I've invested in 12, 13 years ago, and they still haven't exited.
Yeah. Yeah.
They're still breathing. So,
yes,
you
they're
know,
still alive.
still got a pulse. Yeah.
Is there anything founders do when pitching that instantly turns on your defense mechanisms? You're like, oh no.
Um, argue with the people that ask them questions.
Okay.
Oh, really? Yeah.
Try to, uh, sometimes they can be quite arrogant in terms of, trying to blind people with superior knowledge when you're pitching, and you'd expect them to have a greater understanding or more detail of the business that they're pitching in, but you wouldn't expect them not to respect the fact that there might be one or two people in the audience that also have some knowledge in the area that they're pitching in because they've investigated an area and are wanting to commit to and they may have had a lifetime of experience in that sector anyway, that's led them to be interested in investing in that sector. So I think, like, arrogance is not particularly attractive,
I
you know
imagine you see that one a lot.
when exhibited, uh, or entitlement. I think some founders seem to think that just because they've invented something, come up with an idea, it is the greatest thing since sliced bread and people should invest in it. Well, the whole kind of build it and they will come, I've put all this work in, I'm entitled to get some investment in this is just a bit wrong-headed. You've still got to prove that you validated it and there's a market out there and
Yeah.
so on.
Yeah.
And it's people want it is the main thing.
Yeah.
Because I feel like it's very easy to build something that you think's great,
Yeah.
but
I mean,
if
no one else.
thousands of other people don't think it's great, then why are you building it? And it's quite
Yeah.
easy to get lost in that.
And people get too far down the track where they can't stop
Yeah, they
themselves.
can't stop and go back. It's yeah. Now I want
Yeah.
to talk about. I want to go to 2022. You
Mm,
had a series called hashtag How Not to Annoy an Angel.
yeah.
What were you seeing repeatedly that made you start that series?
Yeah. At the time, I was working with someone that was more experienced in supporting startups, supporting founders, and they used to come along and talk to the pair of us and pitch and not so to practice pitching, if you like, not
Yeah.
to raise money with us, but to, as part of a readiness journey, if you like. And I hadn't at that time been particularly active on LinkedIn, although I joined the platform probably 10 years or so earlier than that. It was just something I didn't do a great deal with. But then I saw, lots of people make some kind of fundamental mistakes in getting ready to pitch and pitching. And I thought, if you do this live, you're just going to annoy angels because it's like you haven't learned the basics of how to go about doing this.
Yeah.
So I had a series of posts on LinkedIn, about 30 of them over probably one a week, that I attached the hashtag "How Not to Annoy an Angel" to, partly for my own amusement. I like the hashtag.
Yeah, I like it too.
Yeah.
And that was the precursor, really, to me writing a book about angel investing from an angel's perspective. So, some of the obvious things are still kind of obvious today, really, in that people would go ahead and develop their idea before they talk to any investors at all, and they would present this idea. Or this service, or bit of software, or bit of hardware, or whatever, as an opportunity to investors that they hadn't taken any investors' opinions into account as to whether they thought there was a market for this. And it was almost like a fait accompli. I know there's going to create a dog walking app. I've never spoken to a dog owner. I've never spoken to an investor that likes dogs or whatever. I'll just create this app, and then people with dogs can sign up and someone will come and walk their dog, and just loads of people ask for money on the flakiest of ideas. And it was no surprise that people were disappointed because they'd just not done any basic research, and also because they'd never spoken to investors. They'd never worked out the basics of relationship building. They didn't understand how to create a rapport with anybody that might lead to trust. After they'd spoken with a potential investor 2 or 3 times.
Yeah.
So, if you're not going to invest in the relationship building side of trying to raise money, if you build your app or your bit of software, and then you just pitch bomb everybody or do cold outreach to everybody, then it's no surprise that people ghost you or ignore you or
Don't entertain
Yeah.
it at all.
Yeah.
don't entertain it, can't be bothered.
Yeah.
You just haven't. You're trying to make a transaction work rather than a relationship work.
Yeah.
Yeah.
Now, I'd like to talk about your book. Why did your book need to exist? So why should someone go and read it?
Okay. Do you mind if I just flash the book on the
Of
screen?
Go
course,
ahead.
yeah.
Go ahead.
Show
So
There
this
you
is
go.
a
Angel
book.
Think.
It's
Angel
called Angel
Think.
Think. It
Yeah.
says The Founder's Guide to How Business Angels Think and How to Raise Money from Them.
So let's say there's a young person. Let's say there's a young person watching right now,
Yes.
and they want to start a business,
Yeah.
and then they want to start raising money for it.
Yeah.
Why is your book a great option for them to go and buy
Right.
to understand this further?
Hello, young person. Yeah. Um,
Listen up.
I think that. So I'm going to stereotype quite a bit, just to kind of put young people in a kind of compartment that not everything applies, but young people often come to the idea of starting a business because they've had a certain amount of media influence, that this is a great thing to do in the world. They might have a passion for something. They may or may not have, spent any time validating it. But often their difficulties are that unless they come from a place of privilege, they've got no money or very little money, they've got no savings, they can't afford, a lot of what's required to pay the basics to get a business off the ground. If they've been to university, they'll have debt. They hopefully, have a high degree of optimism, but they haven't had much experience of failure in life
Okay.
compared to an
Yeah.
older
Yeah.
person. And I think the at a person's attitude to failure is really key. How they deal with failure, how they treat failure as a learning experience that they have to get up and put behind them and get on with. Um, growing or making the business happen, I think
Yeah.
is really important. And the other thing I think or one of the key things that I think leads to the success of raising money is not just you personally as an investable person, but you being able to put together a team of people that will work together collaboratively to grow the business. So you may choose one or two co-founders, and you make a couple of first hires when you've got some money, or you try to bring them on board on a sweat equity basis with the strength of your vision, with the promise of being able to pay them later. What I think young people do more commonly than older people older people generally have a bigger network of people that they've got to know through university, their work, and so on, is that they turn to their mates to say, I've got this idea, would you like to start this company with me? It can turn out that their mates are part of the team, not because they've got any special experience, but because they're their mates. So I think a young person needs that much more judgment, astuteness, caution, if you like, in choosing the right people to build a business with. It's not an extension of your friendship circle.
Yeah.
It's being collectively able to make sure a business happens.
Sure. Okay. So let's say there's a 19-year-old and they don't have this network, like you said there. They've got they're struggling with things like that. How can they actually get in the room? Where can they find angel investors?
Um, I almost think it's the wrong question to begin with. you know, that 19-year-old that believes they've got a great idea, an investor won't look at them until they're sure that they've validated the idea, and they therefore need to do an amount of work to prove that this need for this, the solution to this problem, needs to exist in the world, and it needs to be like this because it's better than any other solution that people are struggling with. And they need to prove a key thing, which is willingness to pay. So there's no point in having a great idea that you can't be fairly sure that there's a decent enough size of a market and a willingness to pay for that
Yeah.
market. And once you've got that kind of, it might be an idea, might have grown into a minimum viable product that you can share with people because you've got some conviction yourself that there's a market for it and people are going to be willing to pay for it and the market's big enough, there's a big enough need out there. Then you can get into a position where you can begin to try and talk to people that may not be interested in investing in the first place, but are willing to see what traction you can get. So that when you get to a certain point, they will say, yeah, you haven't fallen over. Yeah, you've been at this for 6, 9 months or whatever. Now's the time we could have a conversation about possible investment. The possibility of trying to raise money for an idea only is really tough.
Yeah.
And well, really tough for a 19-year-old, certainly. It's less tough, obviously, if you've had, you know, your ex Google senior
Yeah.
partner, whatever, had 3 exits already. You can go out and raise a few billion just because you've had a new idea, because people can see you've got a track record. I think that, say, going back to your notional 19-year-old, what's going to serve them well is kind of what they've been doing since they were 5 almost. Did they have a lemonade stall? Did they go and buy stuff in a high street sweet shop and take it to school and sell it for twice the price? You
Yeah.
know, did they create some kind of group or club, that just among their mates, they were paying pocket money to be a membership for? Did they
Yeah.
basically did they show any kind of entrepreneurial trait before they were 19 and before they came up with this idea? I think
Yeah.
that
Okay.
stacks up fairly
But
well.
like, but how do you actually get in front of people like yourself? Say they've done all the things that you've mentioned there.
Yeah,
They've got the product, it's ready, they've tested the market. Where
yeah,
do they find someone like you? Is it just a message on LinkedIn? Are there groups they can get in front of? Are there
yeah.
communities? What advice would you give them?
If you've got to a point where you feel that you can show readiness, if you like, then there are, for example, about 85 or more angel groups
Okay.
across the country. There's one in every city, every major city, I think, as an angel
Yeah.
group usually. So you can approach an angel group and they will say, we'd need to see a pitch deck, that sets out your ideas and so on. Um, there are a load of things called incubators and accelerators, that you might get free mentoring over a short period of time, usually 2 or 3 months. And maybe that's a better idea, than going to an angel group in the first place. So to join an accelerator, you get onto a kind of development program. It's usually free to you. Some of them charge you, not a large amount of money. What they often will do will want to take a small portion of your equity in your business in the hope that, if you're one of the successes sometime down the line, they will own a portion of equity in your business. Might be 3, 4, 5%, not always a great deal, but they might some of these accelerators might offer you a sum of money in return for equity. They might offer you 25, 50,000 pounds to help you build an MVP, for example. And they usually have an event at the end, which is a kind of passing out parade, if you like, or a presentation where where founders are invited to pitch to an invited audience, and some of the invited audience would be investors who may see you pitch and may be interested in following that up. There are CIS funds you can approach. I wouldn't suggest you approach VCs. They won't be interested in you at that early stage. They
Yeah.
are looking for companies that have already got some traction and they want to offer them rocket fuel to. Then I think there's the importance of just building a network of people. So I'd say every single angel investor you know of and you approach will know one or more other angel investors. They hang around in groups or clubs or
Small
whatever.
circle.
So,
Yeah.
so they won't all give you a warm introduction to someone else if they think that your idea is daft or whatever. That destroys their own credibility. But if they like what you're doing, the easiest thing to do is to say, could you introduce me? Or if you can't introduce me, just tell me the name of at least one other person that I should go away and talk to. So then you just expand your circle over time. What I would say is it's really difficult to do it quickly. And I think the important thing that anybody trying to grow a business has to learn at the beginning is patience. It takes people 6 months that know what they're doing to raise a round, if they're successful at all. And for someone that's not sure what they're doing, you can expect it to take a year or more.
Well, thanks a lot for joining us, Phil. It's been great to talk to you.
Okay,
Thank you.
been a
We
pleasure.
appreciate your time.
Okay.
Okay.